Now let us discuss about the GST returns. The report on GST return is a detailed one, and the government has provided that there could be 8 formats or 8 forms for filing of GST returns. It is expected that an assessee on a monthly basis could be required to file as many as 5 returns per state. Apart from filing the 5 returns on a monthly basis, the assessee would also be required to file and return on an annual basis. Let us understand what are these 5 returns. The first return, that is GSTR1, would be a return disclosing all your outward supplies. The GSTR2 would be a return disclosing the inward supplies. The third return, that is GSTR3, would be a combination of inward and outward supplies. The next return would be a return for ISD purpose, that is Input Service Distributor return. And another return which an assessee would be required to file would be return regarding TDS, that is tax deduction at source. So on monthly basis, the assessee would be required to file 5 returns. So when you compare this return mechanism vis-a-vis the current return mechanism for a particular service tax assessee, you will realize that currently a service tax assessee only files 2 returns on an annual basis, whereas in GST regime he would be required to file as high as 61 returns on an annual basis. So one can expect that there would be a tremendous increase in terms of quantum of work. What is interesting to note is that the GSTR3, that is the monthly return, would be auto-populated by the system based on GSTR1, that is the return for outward supplies, GSTR2, that is the return for inward supplies, GSTR6, that is the return for ISD supplies, and GSTR7, that is the return for TDS. The GSTR3 would be auto-populated, still the assessee would be granted an opportunity to correct, add or amend the GSTR3. As regards the input tax credit, the system will auto-populate your credit eligibility. Once these details are auto-populated, the assessee would be in a position to amend the credit details. Where the credit is not eligible on a particular input, the assessee would be required to modify such credit eligibility in the GSTR2. The GST report on return also provides that in case of invert duty structure, the assessee would be in a position to claim either refund or the assessee can carry forward the excess balance of credit. Report also specifies that in case of capital goods, the credit would be allowed over a period of 2 years. The assessee would be in a position to file returns even if he does not pay the GST amount, though such return would be considered as invalid returns. The next important aspect is that in case of any delay in filing of returns, the assessee would be permitted to file or upload the returns only by making appropriate payment of late fees. And the return report specifies that in case of advance payment which are received, there is a possibility that GST could be required to be discharged by the assessee on such advance payment which are received against the future GST supplies. In case of B2B supplies, that is business to business supplies, the assessee would be required to file invoice level details. Further, the HSN would be mandatory in case of certain assessees. In the next few months, it is expected that the government will be putting the draft GST law in the public domain. With the 4 key reports being now available in the public domain, it is high time for the taxpayer in India to understand impact of GST regime on their business operations to ensure that they are way ahead of the competition.